About to hey, how you going? It's James Whelan
Mm.
here, and you are listening to the Theory of Thing Investment Podcast, episode 87.6, start date 22:37.1. It's the 23rd of May, 2025. My name is James Whelan. I'm the Managing Director of Barclay Pierce Capital's Wealth Management Team. I am joined here by Heath Moss of HLM
Hey,
Investments. Heath, how are you now?
very well, mate. After getting past some technical difficulties, I'm ready to go.
It's 10:40. We're supposed to start at 10:30. That's on you. That's coming out of your end, pal. Okay? Right?
No worries.
Thinking
I'll
my
owe you a
time is
beer.
just infinite. Anyway, yeah, buy us a beer. We've actually never met. Isn't that the weirdest thing? One of my best mates. Never met him.
Yeah, I know.
Probably
I
just for
know.
the
Weird.
best.
Yeah, you probably
Um,
you're not allowed into Adelaide. I don't want to go to Sydney, so yeah, that's the way it is.
Mate, I am beloved in the street of Adelaide. Street, I should say. They threw a ticker tape parade down Adelaide Street for me. It was wonderful. It's just James is back in town. Mate, I have had a time. Hindley Street. I once talked about I
Oh, Highland
Hindley
Street,
Street's a
eh?
wild place. Like that was great. I've emceed a wedding in Adelaide.
Mm-hmm.
My sister-in-law, she's great. She was living over there, and her side of the his side, sorry, his side of the family is they're a bit straight. Well, I was told that they were a little bit loose, and I brought out the best in them. I told some absolute ripping yarns about Adelaide. They love me over there, mate. My sister and so my wife's sister, they're a little bit more straight laced.
Yep.
Um, we showed him how South Australians get it done at a wedding, mate. It was tore the place apart. It was great. So
Fantastic.
yeah, mate, I'm beloved over in Adelaide. How are you going, mate? What's happening with your week?
Not much. My eldest had his ninth birthday party yesterday, or ninth birthday, and it's fantastic. He got spoiled. He actually said to me at the end of the night, he said, "Dad, this was the best birthday ever." So I was really happy with that. So yeah, he got a few toys and books. He's really into books now. So he's reading quite a bit. So yeah, very happy. Family came over, had a barbie, the whole thing. So yeah. What about you?
Mate, my no, pretty interesting. I booked up for Calgary, which is great for
Yep.
myself and my eldest to go over there to Canada. And it is always the way, mate.
Mm.
As sure as God wears sandals, it's like you see that there's a sale on. It's not an official sale. You just go, wow, these prices have dropped.
Yeah.
And so Sydney, LA, Calgary, and then coming back via Vancouver because I want to go through Vancouver. Um, and that's going there. I'll do it. And then Monday, mate, red tail sale, North America, and it's about half. Like it's another couple of thousand off or something. Just
Yeah.
just just crazy sort of stuff. So
Yeah. Yeah.
so now I've got to go
They're
through this process. I got to book. I got to see if I got to cancel.
mm,
Cancel and rebooking is actually cheaper than it still comes out better. I just got to
wow.
do it and sit through this thing. Yeah, and I use
Yeah.
like 250,000 points.
Yeah.
Even
Their
better.
airlines. Their airlines have been saying how travel, domestic travel has been coming down. So obviously they're trying to get some more internationals in. And in terms of prices, like I do our grocery shopping, and I just noticed the other day, bloody 2 liter Coke back down to $3.70 for 2 liters in Woolies.
Is
It's
that good? So I don't know what
yeah,
I don't. Okay, all right.
that's pre-COVID prices. That's surprised me.
Okay,
It's one of
that's
the
that's actual deflation. That's not disinflation.
yeah,
That's actually deflation.
yeah,
God,
yeah.
it'd be good to
I
get a
was
bit of
very
deflation
surprised,
going.
and
Well, we had a
I think my shopping cart is cheaper than it was 12 months ago.
Ooh,
You can really see it in
yeah.
dairy and fresh produce and like meat as well. I think the areas where that hasn't come down is like toiletries and stuff like that. Nappies
Hmm.
definitely haven't. Like still buying nappies for our 2 year old, and they're still much higher than they were previously. Good 20%.
Nappies are always insane, mate. It's
Yeah,
that nappies will always be an insane thing. It's one of those necessities.
yeah,
I'll
yeah,
tell you what. You know what is it? It puzzles the heck out of me, and this is one of those things. I don't understand. And okay, go with you on this. We didn't plan this conversation at all.
no,
But if I was going to go for run for election, Prime Minister, one of my core policies would be that feminine hygiene products would be massively subsidised.
yeah,
So I was
yeah,
talking about nappies are expensive because that's a necessity. However, there are alternatives for that sort of thing. This
yeah,
is it's something that women are forced to have,
yeah,
and they got to pay top dollar for. It's insane. If
Mate,
it was, I will say, if it was the
yeah,
other way around, that if it was a male force thing, you'd be able to get them at ATMs and they'd be free.
probably. Yeah, yeah.
So
We recently, I think it was only a couple of years ago, we put GST on feminine products.
that's right. Yeah, that was
Yeah,
a big scandal on that too, which
yeah,
everyone
yeah.
lost their
But I
mind
mean,
over. And,
if you wanted to boost the population and the general birth rate, you just make stuff like nappies and that tax deductible.
yeah,
The
I know.
easy way
Well,
to get things going.
I'd rather just make every. I think everything needs to be more affordable for that to happen. But anyway, I see where you're at. Like a house. Houses should be more affordable because the theory of stuff. There's two theories: the theory of thing, theory of stuff. Theory of thing is the basis of this show. Once something's talked about enough, it becomes a thing. It's
Yep.
priced in. Effectively, it's just a way of saying that everything is priced in. But some things are not. Some things do not get talked about, and that's what you have to pay attention to, which is what we do here in the show. The theory of stuff is very sound. Economies are built on people having a house and filling it with stuff, hooking up, getting. It was originally the original formation of that one was kids getting drunk, hooking up, having kids, buying a house, filling it with stuff. I got talked to about that one, but I think that I'm now senior enough where I can actually get away by saying it. It is true. It is true. The backbone of society is kids hooking up and having kids.
Yep.
And an economy that does not have that cannot. And I backfilling it with immigration doesn't work either.
No.
And we'll get on that road at a later date. Anyway, so if without affordable housing, then what do you have? You've got kids hooking up and not having kids, not filling with houses and stuff.
But I mean,
Complete debacle.
we have this talk about unaffordable housing all the time, but the ownership rate in Australia really hasn't changed in the last 60 years. I think I saw a stat in 1961. It was like 70% of Australians either owned or rented a home.
Yep.
And at the moment, that's 68%. So it's fallen 2% in 60 years. So, I mean, it's made a big deal out of, and, you know, it would be nice for younger generations for it to be easier for younger generations. But it doesn't seem to be the big problem that the media makes it out to be.
Well, we've had a rate cut, which makes it all a little bit more expensive, if you ask
Fantastic.
me. Anyway, it's great. It just means, look, rate cuts, housing, property markets. I'm not doing this crap today, mate. Give us your spiel. You do 5 minutes. I'll do 5 minutes, and then we'll call the podcast. That's it. Okay, you got five.
Beautiful.
You got 5 to do you. I got 5 to do me. I got to be on a thing at 11 o'clock for the Inside Network. They're doing a
Beautiful.
virtual. It's a thing with venture capital, healthcare sort of thing. It's very cool. Yeah, mate. It looks like we've broken a short-term support.
Yeah,
if I
we
look
could
at
have.
that chart, bang.
This is the SPX.
Yeah.
It shot up. So this gap here, you can see the gap here. It's about 3%. That's when after the China-US tariff pause happened last Monday night our time. Shot up, 3 to 4% on the open. Stayed there. Slowly crept up. And come off a bit over the last week. We're down about 2% in the last week in the US. Now that's all on the back of these little bastards. The yields just going a little, not parabolic, but just grinding higher.
The finicky thing called the 10-year.
Yeah, this is the 10-year.
Or is that the 30-year? Okay.
No, this is the 10-year. The 30-year, I can get it up, but I think
the long end has gone freaking ballistic, man.
It has.
Although we've had a reprieve. Sorry, you keep talking.
We've had a reprieve the last couple of nights. You can see there that the other night it shot up over 11 basis points, I think it was, and it gave that all back. And last night it came off a little bit again. And that's all on the back of, I think, the Chinese-US deal means that, the US economy and the global economy should perform a lot better, given that these tariffs are being wound right back. So we'll have nowhere near the impact that they originally thought. So probably recession and maybe even a harsh slowdown off the cards. The other thought is, the growing US deficit and spending. The big, beautiful bill was put forward the House yesterday and passed. That has some extra spending in it. I think the net extra spending is about $250 billion per year. They have about $400 billion of new spending, but they've also got about $150 billion of cuts in there as well. So I think net is $250 billion a year. But it was mainly this bill was mainly to get those tax cuts extended out to 2034, I think it was. and no tax on tips or overtime and stuff like that. Stuff that Trump promised. And they got through that.
Yep.
I think the Senate or the House got through one of them. They still got to get through the other, but it looks like it's going to be passed.
I thought maybe I don't know. I'm just trying to remember what happened at our morning meeting this morning. I had to say it, I wasn't paying 100% attention in our morning meeting with the market report, but I thought it just came out of committee. Now it's gone to the House,
No,
but
it passed. It passed the
it passed the House. Okay, cool.
Yeah,
All right,
it
good.
got past the budget committee the start of the week, and then last night it got through the.
All right, yeah, okay. So I definitely was not paying attention this
Yeah.
morning. Sorry, Andrew. Okay.
So that happened, and so people are worried, obviously, with a ballooning US deficit. Risk premium. Companies and investors are going to ask for a high risk premium
Yep.
from these yields, etc., etc. I think this is still a short term thing, and if you look at it, we're back where we were in February, and before that, back in November last year. So I mean, it seems like the 10-year is trading in a range. It's something to be cautious of, and could cause a bit of a sell off on the SPX. Like I can see us coming back down to what about 5,600 to 700 there, and filling that gap. We're about 580.50 at the moment. So it could cause a mini sell-off, but I don't think it's the big deal that everyone's making it out to be. I think it's just markets and flows being markets and flows.
Well, mate, the 10-year, I mean, so I sort of looked the other day with the 10-year was actually the yield was higher than where it was when Trump caved on Liberation Day stuff.
What date was that? That was sort of we got.
So after April 2. So the days like the week following that, when the 10-year bonds just got dumped in the 2 weeks following that.
Yeah,
probably by China.
I don't know the exact date that is.
April 2.
No,
and there was a point.
Yeah.
There was a point there where that's going to be it there.
Yeah, this is where April 4th is where the yield bottomed. It got as low as what's that, 386. And it has climbed
lifetime
ever
ago.
since then. Yeah.
Yeah.
I think
so
this is where it caved around the 30th.
Well, he did temporary rollbacks. See that? I want to say it's a spinning, not a spinning top. It's an evening star or whatever it is. It's up there.
Mm-hmm.
So go back a few days. You know the one that look at me with my candle formations here. The evening star formation is a candle that's very fat at the bottom with a really long tail at the top.
Yeah.
So a few days back before that. No. Back at the top.
Up the top.
Back. Left. It's an evening star. If I have to point out the candles to you, I'm not doing charting with you, pal. Okay. High distinction in technical analysis. I'll let you know. Thank you very much. Go left four channels. 3, 4. Now one more. That one. That's an evening star.
Oh, that one. Oh, yeah.
Yes.
I thought you were talking more recently.
It's like talking to.
That's Friday the 11th. Yeah.
Yeah. Anyway, so that's when that was the initial. Okay, this has gone too far, and he actually started to go. We're gonna we're doing deals. We're doing winding back. Yeah. And then the full capitulation was a couple of days after that.
Yeah.
It's now higher than where it was when he did the capitulation.
Yeah. What is that? That closed at 449, and it's now 3 basis points higher. So I mean, net. I mean, not really much there, but
well, if that was enough to drive him to do it. So okay, gold. Show me gold. Show me gold.
Gold. Now I did this. I prepared this.
Hey man, I'm literally recording the podcast now. I'll call you back. It's a guy who actually listens to the podcast. G'day, Craig. How you going?
Beautiful. Gold just seems to be trading that channel downwards. It's up about 3.5% this week on the back of just those deficit worries, etc. Maybe some of the Ukraine stuff breaking down. I don't know. And maybe an escalation in the Israel sort of stuff. There was talk that they may fire some missiles on Iran. So
sweet.
Yeah, so gold's it's definitely trading down, lower highs and lower lows. I'd expect it to come back down to that 3,120 to 3,160 around that range, and settle there, and we'll see what happens. If yields keep going higher and the US dollar, turns around and goes higher, gold it will come down a lot lower. But I don't expect that. I expect yields to come off and the US dollar to strengthen a little bit. So. I see gold still coming off a little bit, but testing those, but bouncing from there. So, as I said, I think last time around, I've taken some off the table with gold. So yeah, looking good there.
All right, my turn,
oil,
real quick.
okay.
Oh, sorry, go on.
Just quickly, oil coming off on OPEC plus talk that we're going to add 400,000 barrels a day in July. That's on top of the 400,000 in June, and talk Iran sanctions coming off and could add extra supply there. And then Bitcoin new highs,
Yeah, baby.
111,000. You know, sort of precursor to this all. I saw a really good chart the other day of Bitcoin and M2 money supply being high correlation. So if M2
I
money
saw it
supply,
too. It's 10 weeks. They're 10 weeks off. And that's so M2. I actually mentioned that on I mentioned that on Ausbiz yesterday, and I didn't have the chart. I didn't put it in there. All right, now it's time for Jimmy's chart storm.
All right, you go for it, mate.
You go. How do I share the screen, son, on this? Yes. Now, don't wrestle with the pig, because you'll both get dirty, and the pig likes it. So, real Donald Trump tweeted talking about Walmart having to eat it through their margins on the tariffs, which I think is amazing to have price fixing. Welcome to fascism 101. But anyway, he's saying, look at that. Now, the reason I mention this is because Walmart can theoretically eat tariffs through their margins. They can eat into their margins and go. Small businesses can't, which is sort of part of my thesis that small caps are just not a buy at this particular stage. I think that the tariffs have already just gone too far. And even if you unwound the entire thing, the effects of them are going to be felt, especially in the smalls, especially in the backbone of the American economy. And we're going to see some real issues coming out from this going forward. We have seen 36% of commit. Now, I put this together the night before last, so literally before that corrective not a day yesterday that we had. So it's always the way that I do it. And then it's just like, I was calling that it was going to be a short-term short, and it's like, correct. And it's like, great, James, you're a day late. So, but 36% is retail. You know, the retail is not often the smartest money in the world. But that is a lot to have gone into this market. The retail. Can you see this on your side? Is this working?
Yeah, you can see it all.
Good.
It's fine.
On the other side of that coin, this is amazing. This guy on Bloomberg, retail accounted for 36% of all trading volume today. This is quote, highest ever. Retail has learned the hard way, getting left behind during previous stock recoveries supported by policy puts. There's no policy put this time, pal. There is almost an unwavering commitment from retail to never make that mistake again. Yeah. Or they get wiped out in some sort of short-term correction, and the weakest hands. Retail money is shakier than two porcupines on their wedding nights. And so is this market over in the US, if you ask me. Because we've got hedge funds have added $25 billion of short equity futures over the last 3 commitment of trade reports, largest increase in at least the last decade. And look at the valuation of this market. Hoi bejesus, fooey, moi moi. The forward 12-month PE ratio for the SPX is 21.4, at least it was 2 nights ago when I actually put this together, which is well and truly above the 10-year. I'll tell you what, you had about 20 minutes to buy it down at
on the lows
at 18 times. You had there was there for about half an hour. That's when you go. Hit the button, go. Buy it at 18, go nuts, right? Don't be out there buying it at 22. You need some other thing to come up here, and that's the outflows in small caps. Someone has added this line, or Bank of America has added that straight line to talk about the $68 billion, which is where they see. I think it's then seeing where that small caps, because that line has gone. See, that's half, sort of the half year, which is where we're at to
20,
now.
Yeah.
And then it's just gone straight lined it straight down to 68. Great. And then we've got this fun chart, which I love this chart.
I love
this is
one.
fantastic.
Yeah.
This guy, Andy Constan, has put this up about where you land. You've got the SP 500, and you've got the 10-year note, talking about where most likely the US economy is going to find its way, because it still hasn't actually found its way post-COVID. Soft landing, higher for longer, recession, all this sort of stuff that was going on. Right now, so that star's now got to come down, because this is like a week ago.
Yeah.
Where'd you say it was? Where's the 10-year now? 458?
452.
452 puts us about almost there. So we're about there. Yeah, we're about there, I would say. 452. But the SP 500 is now still in that bracket.
Yep.
So we've moved off soft landing island. I said on yesterday, it's just like it's heading straight to deficit beach, mate. They're charging. And there's no machine guns up on the beaches protecting it. It's gonna go, they'll be able to walk straight into that place, mate. Okay. Yeah. Normandy is happening, okay, and the boats will open and there's nothing coming in.
Yep.
We are not buyers of the market here.
No.
And
no. Interesting. No,
On that note,
I
we
did
got
a
to
lot
go.
of.
Yeah.
Okay, yeah, I did a lot of buying last couple of weeks.
Oh, really? Yeah, last couple of weeks. Yeah, but just
Yeah.
not this week. So I was looking at
Yeah.
just going, no, let's just see how this pans out. Give me a
Yeah.
footy tip, and then we got to go home.
Footy tip.
Oh.
Crows by 10 goals plus. Playing West
10
Coast
goals.
this week.
Who are they playing? North Melbourne.
West Coast at home.
Yeah. Okay. Fair enough.
We'll be wet.
10 goals plus in the rain. That is asking a lot. We got Manly Seagulls, Penrith Panthers, Newcastle Knights, Sydney Roosters, Cronulla Sharks, Sydney Roosters. I reckon the Roosters. No, they're missing Crichton. They're missing everyone. It's Origin. Origin is often crazy. The Wars at home to the Canberra Raiders, 181. I think that's good. I think the Wars will just keep on going with this winning cycle. Canberra away, just flaky. I think Canberra win the grand final, but that's it. All right. On that note, thank you very much, Heath, for joining us on the Theory of Thing Investment Podcast. That's the box of dice.
That's right.
If you need any questions, any feedback, any mail, I don't know, send it to someone who gives a rat's. Anyway, you know where to find me. James Whelan, Barclay Pierce, Capital's Wealth Management Team. If you're a young advisor looking for a job, give me a call. I got a couple of desk spaces free. I'm putting 2 new guys on Monday. It's going to be wild, mate. Absolutely smashing it. We are growing at leaps and bounds. I got to iron more jerseys for this nonsense. All right. I got to go. Thanks very much. Have yourself a good one. Go Crows. Go anyone else you like. I'll talk to you later. Hey, everyone in Adelaide too. Say hi to your mum for me.
See you later.
Go well. Mark well.